A couple of weeks ago, Jason Doty with JP Morgan gave a presentation at a webinar and went through the JP Morgan Guide to the Markets and explained what was going on in the economy and gave us some insights and some things for us to think about. I'm going to put the link in the description of this video to see that as well if you'd like to see the full presentation. But one of the things that really stood out to me during it was this slide that you can see on the screen now. So it's the consumer confidence in the stock market. And I believe this is done through a University of Michigan poll. And it shows that from 1971 through this year, June of 2022, where consumer confidence in the stock market sits. And you can see the middle blue line is the average of 85.6. And the low goes where we are basically today. So in June 2022, the low was at 50. And that just broke the last low that was the lowest, which was May of 1980. And what we can see is there's these inflection points that are the blue dots, and some are above the annual or the average and some are below the average. And if you look up in the corner, there's the returns that happen 12 months after those inflection points, those peaks, those 8 peaks or the 8 troughs, including the one we're in today. And the thing was really interesting to look at, just showed if you had invested only when you felt good about the market, you would have invested above the blue line, right? Consumer sentiment would have to be positive and feeling good. And if you did that, the subsequent 12-month returns after you invested, after those points of inflection, would be 4.1% would be your return in the 12 months after. As opposed to where we're at now, when one of the 8 negative or down sentiment troughs, the 12 months following on average have been at 24.9%. Now, clearly we don't know where we're going to be for this one, but if we look at the other ones, that would be the amount. So when we think about buy low, sell high, it's a concept that's hard to do in practice. And this is why it just doesn't feel good. You just don't really love what's going on right now. No one does. But the reality is that we're positioned in a pretty good position to have it come back up. And this is showing that this study would say it would come back on average about 24.9% in the subsequent 12 months. So just some food for thought as we hear these, shocking headlines like worst consumer confidence in 50 years. Yeah, and let's take advantage of that as best we can. So feel free to reach out with any questions and have a great rest of the day.